Hey everyone, hopefully you're having a good day. My name's Andy. The channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's @_finance. And again, if you want to join our community, finding-value.com, you can see the website and the code special if you'd like to join. And that applies to both monthly and yearly memberships. So unusual whales breaking. Trump is meeting with his National Security Council in the Situation Room, reportedly to decide whether to strike Iran or not, per Axios. And I'm sure if something were to happen, uh, it most likely is going to benefit oil. I think that that trend is already in place, in my opinion, and all of this is in response to what I think is already coming. So I think they're trying to cover it up with war. They're going to say, well, oh, well, it was because of the war. No, it was, this pattern was here before. It was before it, and everybody else. I mean, it's coming. That's what I'll say. It's coming. Oil's up next against all odds. I really like the charting that this guy does. I agree with it too, and I don't like it just because I agree with it. I like it because I think it's right. Some people will say, "Oh, you only like it because it agrees with what you think." It's like, no, what I think is right because that's me interpreting what the data or the charts are telling me. So I agree with things or people that I think are right because of their logic and their reasoning, or the way that they are interpreting the charts. So what he has here is he's got up top, gold is our leader, and gold's already, I mean, this thing's flying. You can also look at the fractal pattern. The fractal pattern, what you get is you get these kind of like this move like this, right before big upward moves. And we've got that fractal here of gold, which is the same that thing that copper has right here that's ready to break. And then oil's got the same fractal pattern for the most part as copper does. So gold's our leader, it's ripping higher. Copper's probably going to follow next along with gold. So, or along with oil, I mean. So oil's up next. It's ready to rip. Now, here's the thing. Are we really moving higher because of war? No, because gold's already moved. It means whatever is happening, people already knew about it. That's why they positioned in gold. Now, as gold has already moved, that money that's been created, or wherever it is going to flow through the system, and it's going to flow through copper and oil next. And that's what the charts are telling us. So my question is oil moving up caused about the war? In my opinion, no. Everyone's already lining this all up. So you could say that they already knew about the war, that everybody knows about the war. They probably know what sides are going to do or what. But what if the war is not the cause of the move? It's a symptom of the move. And they need something to blame because oil was going to do this either way. I'm in that camp. I'm in the second camp that oil's going to go up no matter what. Gold's it already went. They're going to print money. It's the situation that the entire market is in. They needed to print money, therefore they needed to create an event. That's what I mean by that. Andrea Steno Larson says, when people understand that Iran is toast, the market will go vertical. I think he's talking about oil. That's also what the chart pattern suggests in history, that oil will go up a lot. I don't know about vertical, but it will go up a lot in a short period of time. Wow, is this right? Gold from 2000 against the S&P 500. Yes, it is right. And that's what gold is doing. We're in that cycle where gold outperforms. That's also why I am a big proponent of investing in physical metals is because bonds are out, physical metals are in. And whenever you can buy something that has very low risk and it outperforms your higher risk returning areas like the S&P 500 or the Nasdaq, that's when you pile into these low risk areas. I think that silver and platinum present some of the best opportunities the market has on a risk adjusted basis. So physical silver and physical platinum. Gold's really good too. One of the best performers out there. So XOP versus SPX, the S&P 500. XOP is the energy ETF. I write, looks kind of bullish to me, folks. For my boy XOP, yeah, you know me. So here's the charts, XOP divided by SPX. You can see we bottomed in 2020, specifically the corner here. Now, let me open something up here real quick. I'm going to show you a little bit different viewpoint on this. You can see the breakout there already, but we back on out. So this is the way that I view it. A lot of the times you'll get a large squeeze into a corner. This is where I purchased it, in the corner of the corner. And everybody knows I like my falling wedges that are on the website. Then it creates a double bottom, or potentially you can find bottoming patterns where you get like a shoulder, head, shoulder. Not stating that this is a inverted shoulder, head, shoulder. To me, it looks like a double bottom. And then if you look on the right-hand side, we have another falling wedge. In bearish formations, you create patterns that are angled upward, right? So you fall into it from the top side down, and then the pattern's angled upward. We have a bullish formation now because the pattern's facing downward. And then we also are starting to break out of the pattern here. So this here is important because it tells us something. It tells us that when energy stocks outperform the S&P 500, which we're basically starting that move, it tells us that the market conditions we are in have changed, that we are entering an inflationary impulse move higher, and that we could go up substantially. As the S&P 500 underperforms gold, remember, gold's our leader. As we see that ratio fall in favor of gold outperforming the SPX, we're going to start to see commodities outperform, like energy and other commodities, copper and whatnot. We can put copper up against this. I'm not sure if copper is broken out against SPX. It's probably pretty close. And then we're going to start to see outperformance here. So we can put kind of like a big double bottom here. And then the next shoe to drop here is going to be copper breaking out of its downtrend. And all these are going to start to break. They're all going to start popping off one by one. And when they start popping off, people are then going to start looking at this. They're going to say, oh my God, copper is such a good investment. No, you should have already been in it. Or energy or whatever. The patterns are all there. They're all lining up. And then we're going to start to see these things pop off all over the place. So that's what's going down there. And that's why I'm bringing it up. Coming down, we've got HFI research. U.S. crude storage outlook is unsustainable. What does he mean by that? Look at this. Minus 10 million barrels of a deficit. 10 million barrels. So they're going to start to get desperate here, guys. Who is they? Everyone. The entire world's going to get desperate because if oil goes short and oil goes up a lot, it's going to be a highly inflationary period. And that's exactly what XOP divided by SPX is telling us too. It's saying, okay, people are positioning for an inflationary move where oil prices could go way up. And you know what else we could look at? Yields. Yields would be the next thing to look at. And if yields start going up, that would also suggest that inflation is coming. So we should see bullish formations on 10 or 30-year yields. So here's copper. Remember, we were looking at copper just recently. So copper buyers face the biggest squeeze since 2021 as stockpiles drop. Okay, copper's looking pretty bullish then. It's looking bullish. Let's keep going. Investors are the most underweight US dollar in 20 years. Bank of America Global Fund Manager Survey for June. Now, this would be a bullish chart, not a bearish chart. So most people, they'll read that and they'll say, oh, they're the most underweight. Therefore, people don't like the dollar. Therefore, I shouldn't like the dollar. I don't know if I'd read it like that. Whenever you're down here, that could indicate that we could see a dollar move higher. And I know that goes counter to everyone else, but there could be a period where the dollar strengthens before it weakens. It's like a false move. It's kind of like Barry Sanders running. He wants to get by a trend line, or he wants to get by the line, so to speak, a resistance line. He has to fake left before moving right, and I think we could get something like that for a period of time. Oil market. So this is what I mean by this data that gets released. The IEA is basically they support government. So look what they have here. Oil market. In its monthly oil market update, the IEA sees oil market massively oversupplied, with global inventories increasing at a rate of 1 million barrels per day since February. The IEA cut slightly its forecast for oil demand growth in 2025 to 720,000 barrels per day from 740,000 barrels per day last month. Is that really what we're seeing, though? Then what did we just read above? That HFI Research was projecting a minus 10 million barrel per day shortfall or deficit. Well, that doesn't square up, right? Why is one person so far over to the left saying we're going to be an oversupplied market? Why is someone so far right saying that we've got a huge deficit in the market? I don't know, guys. I don't believe these numbers. I don't believe it. Here's the 30-year, US 30-year. Cattle should start to pay attention here, the herd. Cup and handle on the 30-year where we could break higher on yields. You know what that also signifies? That the bond market thinks that we're going to see inflation in the future. Well, if the bond market, which is the insiders basically, think that we're going to see higher inflation, what do you think that's going to do with oil? Oil is going to break higher. Well, then why did they release this huge? Why is oil breaking higher if we're going to get all this massive oversupply? Because that's probably fake news. Probably. They're trying to suppress and get people out of it. Well, it's not how I'm reading things. This is Brent. Absolutely massive run ahead for oil. False breakdown slingshot cheetah style. It's not in alignment with what the IEA says. You guys notice that? You notice that so think of it this way. This is what I really want you to take away. If we get a big move in oil, understand that the news is fake and you can't use it for anything. Once you figure that out, you'll become a better investor because you start to ignore all of the crappy news that gets released to try to influence the herd to do something. So I think we could see a big move higher. Investment wisdom, Warren Buffett, if you had to choose between two, pick this. Let's read this real quick. He says, Charlie and I try and distinguish between businesses where you only had to have been smart once and a business where you have to stay smart. Retailing is a good case of business where you have to stay smart. You're under attack all of the time. People are in your store. If you're doing something successful, they're in your store the next day trying to figure out what it is about your success that they can transplant, maybe add a little something on their own situation. So you cannot coast in retailing. There are other businesses where you only have to be smart once, at least for a very long time. There was once a Southern publisher who was doing very well with his newspaper. And someone asked him the secret of his success, and he said, monopoly. If you had a big network of television affiliates stationed 30 years ago, there's still a major difference between good management and bad management. I mean, a major difference. You could be a terrible manager and make a fortune, basically, because the one decision to own the network TV affiliate overcame almost any deficiency that existed from that point forward. So ideally, You want terrific management at a terrific business. That's what we look for. But if you have to choose between the two, get a terrific business. A terrific business trumps terrific management. And that's something that you might want to look for in the investments that you are making. Chuck Ackery says, follow your passion. That's the most important thing. And read like crazy. Be curious about everything. Here's another thing. I don't think reading is everything. I think learning how to think is incredibly important. And if you learn how to think, I think you can break down problems, develop your own solutions, and you don't have to be dependent on reading as much as maybe some other people are. Not everything is necessarily in books. A lot is, and there's a lot of value researching books and reading books, but not everything. A book is an opinion. And I think opinions, opinions are like, they're like your rear end. Everybody has one, right? So I think the most important thing for someone for someone to gain is the skill to critically think. And then if you can critically think and break down data, I think you're miles ahead of everyone else. I mean, miles ahead. I also think that artificial intelligence may or may not be able to do that, at least not right now. There are a lot of things where you can look at data and then you can draw conclusions from data. The people who are very smart will draw the correct conclusions. People who aren't as smart will draw incorrect conclusions from the data. And that's really the big difference. I see it all the time in a bunch of different sectors. There are also times where the data may be positive, start to turn more negative, but that doesn't mean you should be negative on the sector yet. It may take years for the trend to continue in a negative way before it actually becomes impactful. So, understanding the data, being able to decipher correct um, decisions from data, and then knowing when something's important uh, or not important is also another important thing. So, learning how to think and critically think, and then figuring out what's important, and then when it becomes important, are the most important things in investing. And I would say most people cannot do that. They just can't. I think those who go through rigorous training in mathematics, science, um, you could include engineering and other things. All you're learning is how to critically think, how to break down data, how to figure out what solutions you can get from the given data, and then make decisions from it. And then maybe you go into testing and you have to figure out how to test things. There's also statistics and other things that you learn that maybe people don't really understand all that well. Coming down, tech stocks relative to the M2 money supply, dot-com bubble versus now. What this is your tech stocks divided by M2 money supply. It's very high. So what this is telling us is what market condition we just went through. This here is a commodity bull market as it falls. And then when you bottom out like 08, 09, the cycle turns and it goes all the way back up again. Right now we've peaked and we're heading lower. We've entered a new market condition, and I don't think a lot of people realize this. This is where precious metals and commodities outperform. Conversely, if I were to pull up an M2 money supply like silver divided by M2SL, the money supply, we're going to start to see this go up, and silver is going to start to account for the money supply. I don't think people understand that really what is going on is that M2 money comes into the system. Here's our system. The money comes into this system, and then let's say this is asset A, and this is asset B. So money comes in, and depending on the market conditions, it all floods into asset A because that's where it all goes. Asset A is the Nasdaq. So all the money's over in the Nasdaq, and it's going to start to flip. Once the money is in the system, which it already is, here's your system again, and here's asset A and asset B. If all the money is piled over here in asset A, look at that, we can do that. That's straight asset right there. It starts to move over here, and then B becomes more valuable as money moves from A to B. And then B will account for the M2 money supply as money moves into B and forces this higher. So really, it's not money being created. It's not new, fresh money being created and going into the asset. It's existing money in the system rotating from asset A, Nasdaq, into asset B, gold, silver, and other assets, which then goes up against the M2 money supply. So all that is doing is it's the money that's already in the system moving around. That's all it's doing. And it moves from one asset to another, and that's exactly what we're seeing in this chart here. DBC, that's commodities. So what we're looking for is we're looking for rotation and bearish patterns in maybe tech and S&P, and then bullish patterns in commodities. And commodities season is officially back. Energy, metals, agriculture, broad strength across the board, and we're starting to break out of a falling wedge to the upside. Nice little false breakdown, get everybody on the wrong side of things. That's the liberation day. And then once this breaks higher, that's telling us that commodities are game on. It's game on. Here's silver. So it says, in hindsight, it'll be 2020. And the question will be answered. Why on earth did anyone panic sell the past few years out of the massive bull market in silver? That's a big cup and handle. The projected move, he's got $640 in his particular pattern. He's looking at it from a logarithmic perspective. We've got nice, good volume kicking in this thing, which means we're going to get a massive breakout. And he's just saying hindsight will be 2020. Why is everybody panicking here? Why? Guys, this is the time to not screw it up. You only get one shot at it. I'm sorry. I've been buying this for a pretty good long time. I went pretty heavy in 2018 was my year, and I went heavy in 2020 as well with a lot of good deals out there and continue to buy up whatever I could. And here I am sitting on it. Am I scared? No, I'm not scared at all. Now, how did I gain my conviction? Well, we've got this pattern that's the size of Texas here that's ready to break out. That seems pretty damn good. And what else? I mean, what other investment opportunities are out there that I could put a bunch of money in? There is none. So I'm out of the system. I can buy a bunch of physical metal, silver, particularly for this case here, this pattern. And all I have to do is wait. And some people, they can't wait. Again, some of the quotes that I've read is that people who are often right, they buy at the right time, are not able to sit. They sell out, they get scared, they get frustrated, it takes too long. But I can sit. I can make a whole bunch of money. I can do that. As I go through all this, once you figure out the game that you're playing, how you can do different than other people, it's all about time frame. It's frame of reference, time frame, understanding what's important, what isn't important, position sizing, getting the right portfolio to play this. And here we are. We've got this big pattern here. It's about to break. Kevin says, interesting to see how gun-shy silver stock investors are, afraid to chase as the herd has been conditioned over decades for heartbreak. It will be interesting to see how high the metal has to go to spark a major rally in the equities. It's all coming, guys. It's all coming. The US dollar has thus far put in this century's worst performance. It's way off, almost out of the cloud there in 2025, or is out of the cloud. Freight futures AM update. We've got dry bulk, Capesize flat, Panamax down 1, and tankers VLCC up 3, Suezmax down 3. Fund managers heavily underweight energy stocks, and he's got this face there. That's great. That's why I'm buying the living crap out of it. That's our XOP divided by SPX that's just starting to break out. The people who read this and they say, oh, they're underweight, it's bad. They have it backwards. When things are underweight, that's what you want to look at. That's where you want to see if patterns are starting to break to the upside, like XOP versus SPX. This is called an opportunity. Coming down, we've got, okay, I already went over that one last time. So we're going to end it there. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you like, special coupon code over there. And that's all I've got for today. So look for a midweek update on the website that's been posted. And that's all I've got. So we'll catch you next time. This is Finding Value.